Good morning. Thank you, Mr. Popovich, for inviting us. We are very happy to be here and excited. So far, we have a great experience. We just came last evening. Even the weather is much better than what we have expected, so we are looking forward to continue our visit here. We, myself and my partner, Rami Kalish, founded Pitago about 25 years ago, and I think we will tell you our story. What I will do today, I will tell the story of Pitago and the venture capital industry in Israel. And before I start, I want to do it with having the end in mind. We will tell you some great stories, but not in order to tell you that Pitago is so good or that Israel is so great. It's really to tell you that 25 years ago, we started like you guys are starting today. It was almost no venture capital industry. And in 25 years, we reached a very advanced stage, and we are now among the leading countries in venture capital, high-tech, and innovation. So it could be done, and it can be done also here. So I will start with talking a little bit about the ecosystem in Israel as it is today. So it was mentioned that today we have around 7,000 startups active in Israel, and about 10%, 700, 800 new startups that are starting every year. If you look at the investment pace of venture capital money going into startups, today it reached more or less more than $7 billion a year. So every year, more than $7 billion are being invested in innovation and startups in Israel, and it is continuously growing. And the other thing that is very important to understand, that the 7 billion, this year it will probably be more than 8 billion in 2020. This money, most of it is not coming from Israeli funds or Israeli investors. Most of it is coming from international investors. International investors that invested in funds like Pitago, or international investors that are investing directly in the startup companies. So in 25 years, from a situation where we were fighting in order to raise money, we have a constant flow of fresh capital seeking investments in Israel. Another thing that is very important, and this is because the high-tech industry is a global industry. It's not about serving our local market, as we know. So we are a small country, and you are relatively a small country, and you cannot grow and develop a high-tech company by serving the local market. Also, as it was mentioned, also in our case, our neighbors are not so friendly to us, so we cannot also sell to the countries that are close to us. So we had a major disadvantage 25 years ago when we started, because everything that we had to do was about export to other countries, faraway countries. But the whole point was really to change the disadvantage to an advantage. So we, from day one, when we invest in a company, we ask the company, what is your international strategy? How are you going to sell to the US, of course, because the US is a big market, but what about China? What about Europe? What about Japan? So in the last 25 years, the Israeli companies managed to sell internationally. Of course, you need to have a good product, but you have to be willing to commit, to travel, and to penetrate new markets. And then in the last 10, 15 years, when the whole world became flat or global, suddenly our disadvantage became our advantage. Because in other countries that are big, the entrepreneurs were in a way a little bit spoiled, because you could build a big company in the US, or you could build a relatively very big company in Germany by serving the big German market or the big American market. But when you started to go and think internationally, suddenly you found these Israeli guys that are already selling in China, in Japan. So I think this is also something that the young generation here need to think and understand, that the future is really to build a global company. So I talked a little bit about the international and the global aspect of the high-tech industry. This is a very busy chart, but it says one thing that is very important. Today, you have more than 350 R&D centers of leading technology players in Israel. And again, if you think about it, 25 years ago, maybe you had IBM and maybe Intel. Today you have 350 and actually more. And the reason is that they realize that there is a talent and innovation in Israel, and they realize that as big companies, it is more difficult for them to innovate. So many times they approach Israeli companies, and eventually they acquire the company and create an R&D center around this company in Israel. A great example is Apple. Apple, maybe 8 years ago, had zero presence in Israel. And then they came and approached one of our company, Anobit, and they acquired the company for about $400 million. This company developed a unique technology, okay, so they had to do something good, and had around 75, 80 engineers. Today, there are 2 R&D centers of Apple in Israel around this company. I don't know exactly how many people are working there, but probably close to 2,000 people. And this is just the example of Apple. Same you can say with Google, Microsoft, Facebook, and many other big companies that are building presence in Israel. And in the last 10 years, you see also the trend of companies that are coming from other geographies, not only the US. You have big European companies, you have big Chinese companies, you have big Japanese companies. All of them are trying to build presence in Israel in order to explore ways to cooperate. This is great news for the Israeli industry, because this is part of what we call the cycle of life of a startup. So you are a bunch of young men and women that have a dream, and you start something, and you build a company, and then one day one of the big guys is coming and acquire your company. And this is great, okay? Because it's a life-changing event for the founders, for the management. Also, the investors are making a lot of money, so it's also great, and then they can reinvest more. And the team usually go and work for Apple. But the culture is such that after having a big success, and although your financial situation improved dramatically, you don't want to retire. You want to have a bigger dream. So after serving what they have to do according to the contract in Apple or in Google or in Intel, 2 or 3 years later, these young entrepreneurs are coming back to the market, and now they have a bigger dream. And when they approach us, they say, okay, we sold our company for $200, $300 million. It was a great experience, also financially. But now we want to build a company really to become a category leader, to serve the whole world. Our dream is much bigger than just selling it to one of the big technology companies. So this is a great thing which is part of the industry that matured in Israel. So you will see later when I will talk about the potential in cooperation between government and private venture capital. This is us today. We already raised 10 funds. We we have under management more than $2.3 billion. We invested in 220 and more companies. We had many nice successes when we took companies public, mainly on NASDAQ, or we sold companies to some of the big players that I mentioned before. And it all started with a small fund of $20 million that we did together with the Israeli government back in '93. I just want to say something, maybe it's not part of the presentation, because everything looks very good, but we have to understand that part of our job is also to take risks, calculated risk. We have to have a vision, but it's not always working. Sometimes we are failing. Chemi and myself are saying that the toughest challenge that we have is that when we make an investment, we always think it's the best company, otherwise we wouldn't invest. But maybe 20%, maybe 30% of the companies are not successful. And we shouldn't be afraid to fail, because otherwise we will not dare to have big dreams. And for us, if we see an entrepreneur that failed in the past, it doesn't mean that she or he are not good entrepreneurs. So just today, we are operating from several vehicles. We have a fund for early stage, about 185 million. We have a fund for later stage, about more than 200 million. And we also have a fund for health tech, technology and life science. We also operate several incubators that are focused on specific themes. One theme is digital health, another theme is deep tech and IoT. So what we are trying to do today is to give the full solution to a startup to grow from seed to growth. I want to say something about the investments, because later when we are talking about the cooperation with governments or how the industry is going to develop, we have to understand that it's not something that is immediate. It's a process, and when a country like Serbia has to think about the program to develop high-tech, they have to have a vision of a decade, or 10 years, 20 years. And I want to explain that what you see here, on one hand, you see that the total investment, let's see if I can, yeah. So if we look at 2019, the total investment in venture capital exceeded 7 billion. Probably it will be close to 8 billion in 2019. And if you look 10 years backwards, you see that we always had a very strong innovation ecosystem, and we always invested in young startups. You see that about $2.5 billion always were invested in young startups. But look what you see here about investing in growth companies. the amount of investment in growth companies in the last decade grew by 10 times. Because all the young companies, it's like our children. Okay, they are young, but then they are growing. And when they are growing, they need more things. So this is exactly like the situation with the startups. So if you are successful, you raised a seed round of, let's take the Israeli numbers. You raise a seed round, which today is about $2 to $3 million. Then you raise Series A, which today is around $8 to $10 million. Then you raise Series B, which is maybe $15 million. And then you raise Series C or D, that today the rounds of these advanced companies are around $100 million per round, per company. So one thing is to start the companies and to have or to give them a chance to explore the innovation, but then you have to think that down the road, these companies will need more money. So I will talk about a little bit about some examples. I have a couple of, but I will mention maybe only one or two. So this company is, the name of this company is AppsFlyer, and as you see, oops. Yeah, I want to move backwards. And as you see, the company started a little bit before 2014, and we invested in the company when the company had a couple of millions of dollars of revenues, and then the company continued to grow. And the pointer is not so good. And if you look here, in 5 years, the company grew from, let's say, $1 million of revenue to $150 million, and a valuation of 38, 40 to a valuation of more than $1.5 billion. So when we started, we invested several millions at a valuation of 16 initially, and now we had one of the bigger private equity funds that invested in the company about $150 million in a valuation of $1.5 billion pre-money. And what does a company do? Mobile attribution. It helps to monitor and verify all the marketing campaigns that everyone is launching through our mobile app. This company started from day one by selling to different geographies. Today, maybe the US market is a very big market for them, but 50% of their business is coming from Asia Pacific and other territories. Via is another example of a company. Chemi is on the board of Via. Via is developing a solution for, let's call it an alternative to the public transportation. It is a shared ride that is optimized based on the AI platform of Via to have the optimal solution to pick the passengers in different places and drop them in different places in big cities. So it is a technology play. It's all about the brain that Via developed. And Via started by launching the service in New York and Chicago and other cities in the US, but then they moved on with building partnerships all over the world, because they are not trying to be the ones that are controlling the public transportation all over the world. They want to provide a software platform that somebody else will operate. For instance, in Europe, they have a cooperation with Daimler, and in other places they have cooperation with other big operators. So the software will be launched as a service to the different cities. And one example is that they won the tender of the school buses in New York, the yellow buses that all of us are familiar with, and now everything will be managed based on the platform of VIA, but of course with all the advantages of our digital age. You have an application, everybody knows when the child is going on the bus, where is the bus right now, how long it will take the bus to arrive to the next station, when and where I have to wait for my kid, etc., etc. But the story here is the same. We started with Series A, okay, where we invested, and today, after different rounds, the company valuation is maybe around $2 billion. The recent round was more than $150 million, and the money came from different investors. There was no chance in the world that we in Pitago could support such a company alone. And this company, again, grew from zero, maybe, 7 years ago, to a company that is selling today hundreds of millions and has a valuation of $2 billion. But along the years, they had to raise a lot of money, $200 million. So it's not only about the investment of the seed round. It's building a vision and a program for 10 years. I'm going to skip, maybe I'll just say one word about this. Sometimes it's not about revenue, sometimes it's about innovation. Graphcore is a company that is developing the next generation AI chip. We all know that the name of the game is data, and big data is huge in everywhere. Every application you have under it some kind of an engine that is doing AI and big data, and the hardware, i.e. the semiconductor chips, are not optimized for this kind of processing. So the vision of this company was to develop a chip that will be optimized. If you look for a comparable, and this is what we are dreaming for, it's a company like NVIDIA that developed originally a chip to optimize graphical computation. So this company started, and again, small investment in Series A, much more money coming in different follow-on rounds. Valuation today around $2 billion. In their case, they're only starting to sell this year. So the whole valuation is around the innovation and the new approach and the technology and the great team. Without mentioning names, some of the big players in the computer and technology industry already realized that probably Graphcore will have the best chip, and they are negotiating very big contracts with the company. Now so this is a situation today, and it all started 26 years ago with a program that the Israeli government launched called Yozma, where they decided to endorse 10 funds. Every fund was a small fund, 20 million. The government agreed to invest 8 million out of the 20, providing that the managers will raise additional 12 million from private or international investors. Okay. No, thank you. The principles that the government indicated when they launched this program, and we were one of the first winners of this program, was invest in technology and innovation. We, the government, are not going to interfere. They set some basic rules, okay? It has to be investment in technology, not in real estate. It has to have something to do with Israel. We called it those days Israeli nexus. So the entrepreneurs have to be Israeli maybe, or the R&D center has to be in Israel. But the whole concept was that if an Israeli company that has some kind of an Israeli affiliation will be successful, the investors eventually will understand that there is a big potential to make money in Israel. But investors are spoiled. They like to sit on the fence. They like to see, what's happening. A typical answer is, wow, it looks interesting. Maybe you can be in touch with me when you are making more progress. But the big thing is how to start. So the Israeli government understood at that time that they have to give incentive to the investors to make a commitment now. So they launched, as part of the Yozma, an incentive which included an upside kicker, as we say, and a downside protection. Upside kicker meaning if the fund, and again, I don't want to get into the specific formulas because you can adapt the formulas to different places and different ecosystems. But in other words, if the fund would be okay because of the upside mechanism, the investors will do great. If the funds will not be okay, some of the losses will be returned by the government. So the government of Israel looked at it not as an investment, a financial investment where you are trying to generate certain return. They look at it as a way to launch the program. So yes, they wanted to make money, not to lose money, but the criteria for success was, will they need us in the second wave? And in Israel, it was very successful. And this really started the industry. At that time, Chemi and myself, we both managed a small fund of 20 million. And after our success in our first funds, we decided to work together. But in the second fund, we didn't need any incentive from the government. We just raised 125 million on our own. And the rest is history because the results were supporting the industry. It doesn't mean that the role of the government will end. There are many other things that the government had to support. So in the case of the Israeli government, after this general program, there were additional programs supporting specific sectors maybe. At a certain time, when the government of Israel decided to promote the biotech industry, they created the same program, more or less, some different criteria, to promote the biotech industry. Another thing that the government has to do is to create the ecosystem for international investors to be able to invest in Israel or in Serbia seamlessly. The international investors, and I mentioned it before, they are spoiled. They can invest in the Silicon Valley, in London. Why to come to Serbia if life are difficult? If the communication is not, the business communication is not in English, if the way of the corporate law is not known to them, if they have to learn new tricks and new things, they don't want to come. They want to see the same ecosystem, the same framework, the same kind of agreements, the same kind of tax regime as they are used to. They don't want to pay double tax. They don't want to pay taxes here and then to try and get a refund from the UK government or the US government. It's a very complicated topic, but at the end of the day, and I think the authorities here also understand it, it is one holistic solution that will serve the industry. So the principles that I mentioned, which were part of the Israeli program, were the Israeli government invested in the fund, the Israeli government gave the incentive to the investors, not to the managers, to the investors, the upside and the downside protection. The Israeli government insisted, and it was part of a tender, to pick managers that have international experience and experience in high-tech, and the government of Israel did not interfere. They had the right to monitor, they got all the information, they were not part of the investment committee, they just monitored that the money is used properly according to the charter of the fund. We are doing now the same thing in Poland. We created a cooperation with the Polish government. 5 years ago, the Polish government started different initiative to promote the high-tech industry in Poland. The first wave was even before, it was like 10 years ago, but we didn't feel that the ecosystem was ready. But about 5 years ago, we won a tender of creating a fund of 210 million zloty as a partnership with the Polish government. And the Polish government followed the same concept of the Israeli government and of the Yozma program. They wanted to start and to ignite and to promote the industry. They understood that they need to give a upside and downside mechanisms to the investors in order to make decision to invest in Poland now. Poland do have some advantages. It's a bigger country. It's situated in the center of Europe. It's part of the EU. There are many good things happening in Europe, in Poland, but the investors wouldn't make the first move without having such a program. And so far, we are very encouraged by the fact that we see the Polish entrepreneurs, and I'm sure the same will be here with the Serbian entrepreneurs, the young talent that is eager to succeed, that is willing to work hard, that is willing to learn, and we see how the industry is picking up greatly in Poland. So I want to summarize with the principles that we are applying when we look at new startups. And the same should be applied, in our opinion, when governments will look at starting here new venture funds. And we call it the 4 T's. First, and always first, is a team. The team is the heart and the brain and the engine of everything. And if we have to pick one thing that we want to invest, it's the best team. Then the second thing is the theme. Okay, what is the vision of the company? Are you trying to be a Me Too service in a local or regional market? For us, it's not interesting. It doesn't mean that it doesn't have a place to exist. It's okay. But for us, it's not interesting. We want to have a vision, a big dream, something that is serving the big markets. The third thing is the technology. Of course, it's better to have a superior technology, a breakthrough, disruption, but it's not the most important thing. Sometimes a better team is more successful than another team that has even a better technology. At the end, of course, it's a combination. And then the terms. The terms are important. The terms are important for us because our job at the end of the day is to make money. But it's not the most important thing. Because if you are successful then it really doesn't matter if the company will be sold at $1 billion. It doesn't matter exactly if you invested in the first round in a valuation of 20 million or 25 million. This is not the most important thing. You have to have discipline in your investments, but it's not the most important thing. And when I take everything and translate it to the cooperation, potential cooperation between governments and private VC, also here in Serbia, there is a lot of work to do, and we are here for the first time, and we want to learn, and we want to understand what is happening. But if together we can find the best teams and the best themes, I'm sure that we can find very good technologies and that we can start something good here. And I'm very happy to be here because, as I said in the beginning, the story is a great story, but it's not excluded or unique only to Israel. It could be done in different places, including here. And the good news, in my opinion and in our opinion, is that what took 26 years in Israel could be much shorter here, because the ecosystem and the world is different. Things are happening much quicker, and I hope it will happen here in Serbia, and I hope we can find a way to help you. Thank you very much.